Let's talk some gold here. A big move this year, which looked like it was cracking last week. Scott Bauer is joining us from Prosper Trading Academy. Scott, last time you and I spoke, if I recall correctly, you were looking for a pullback in gold as an opportunity to get long. So the pullback that we had last week looks like it was a good opportunity.
It sure was, and we actually spoke last Tuesday, and this was the perfect spot. And when a lot of people are talking about Black Tuesday because gold dropped 5%, and I talked about how there was this little bit of a gap in gold down around 1920-ish, and in GLD, the ETF, right around 181. And I put on two spreads at that point because I thought it was way overdone what we saw last week. Sold a put spread and then sold a very expensive iron condor, and both have worked out really, really nicely. Now that we've seen this rally back, now from a technical standpoint here, looking at GLD, there's actually a gap up here that it looks like GLD wants to fill right around the 189 and a half area. So I'm looking to take advantage of shorting it up here now. So this range of 181 to 189 or so has been a phenomenal trading range in GLD.
Yeah, and we've got the trades here from last time we spoke. I remember this two-part that we discussed with the 21st August expiry and the 28th. So right now that let's just use GLD here. Now that we're at 188, it's a solid move, up 1%. The pickup really happened quickly after that drop. Yesterday, we had also a bid into gold as well. So how do you operate here? Do you do a similar type of trade now, but with a more bearish view, or do you like the gap to the upside as being a bullish view?
So it's interesting. No, I definitely like the 189 area, some temporary resistance up here. So I'm selling a call spread. When we talked last week and I did both spreads, the implied volatility in GLD, the option premium, was much more expensive than it is today on the run-up. And that typically happens as a stock or an ETF moves down, volatility picks up. So I really wanted to be a big seller of premium last week, which I was. Here, I just want to be short around 189 and a half. So I'm selling a call spread. And I'm doing a spread intentionally because, listen, if it does fill that gap that you just talked about, Oliver, and continues higher, if that bull run, continues higher, I don't want to be, open-ended, if you will, on a short call option. So I'm selling the 189, 191 call spread in GLD next week, August 28th. I can do that for about 80 cents or so. If it fills that gap and doesn't hit resistance and keeps going, okay, I'll probably take some losses here, but at least I'm completely risk defined. But like I said, this 181 to 189 area for a very, small time frame, been a great tradable area.
Yeah, it seems like it. So it seems like, Scott, you're also going largely from the technicals here, that you don't have a strong view about the fundamental cause and effect behind gold. Is that right?
Yeah, you're absolutely right. I mean, in fact, gold has really followed lockstep inversely with the dollar. So as we've seen the dollar weaken, we've seen gold rally immensely. And if you go back to last Tuesday when we saw gold really get hit, what happened with the dollar? Well, we had a 1 day or 36-hour move in the dollar where it stabilized a little bit and rallied back a little bit. So that's really the correlation that I'm looking at right now. And if the dollar stabilizes, this sell-off, which is down about 0.5% today or so, if this sell-off stabilizes, we probably see gold stabilize on the upside a little bit as well.
We're going to talk in our panel today about the Bank of America Fund Manager Survey. And one of the things that I noticed from the report, they survey a bunch of investors and compile where they believe things are overvalued, undervalued, where they're positioned. And the gold description of being overvalued just surged in the latest monthly reading because everybody's described it, these investors, as overvalued. But for gold, that's a tricky thing, right? I mean, are people going to be disappointed if they try and think about valuations or certain elevations as being naturally bearish for gold as an asset?
No doubt about it. And the overriding theme to all this really is the dollar and people being concerned, which is a valid concern about some devaluation, which obviously is a bull case for gold. People are looking at this overvalued situation in gold just because of this massive run here. But, I think what you're seeing over the last 2 days also, Oliver, is besides the dollar getting hit, all of a sudden people are looking what happened, the news we got over the weekend about Buffett, taking such a big stake in American Barrick or in Barrick Gold,
Yeah.
and kind of just restirred the pot a little bit, if you will, and maybe we're getting a little bit of the FOMO trade to the upside in gold.
Hey, Scott, one more for you while we're on the subject of gold. Let's talk a little digital gold. I know you're a Bitcoin watcher, of course.
Yeah.
What do you think about the volatility, the big pop, and then a pretty sizable little drop earlier today of about 4.5%? We got back down below 12. For context, the highs of earlier in 2019 during the summer, we got up to a closing about 13,000. But as far as where we are right now, we're pretty close.
Yeah, and you know what? Since April, Bitcoin has really moved lockstep with the entire equity market and with gold, quite frankly. And you look at the technicals here, and Bitcoin has really started to make higher highs and higher lows. And if it can now put some support in here, right around 12,000, which had been just massive resistance for a long time, if it starts to put in some support here and we start to see some consolidation here, I bet you that we're going to see 13,000 before too long.
All right. Really good stuff. Appreciate it, Scott. Good thoughts here. Gold, new gold, everything in between. Scott Bauer, CEO of Prosper Trading Academy. Good to catch up on the trade. Nice trade on gold from a week ago. When we come back,